Well, we're going to go ahead and get started here. Welcome to the PPM Attorney Capital Forum. I'm your host, Darren Mangum, securities attorney. And I think we're getting a number of people coming into the forum, and people will continue to come on here. I was going to wait till we get more full, but in the interest of time, we should just go ahead and get started. And then, yeah, this is going to be recorded, and so it's going to be available on the platform. There's an outline that's associated with this forum session. We're going to stick to it for the most part, but then again, we're going to cover. The main thing is covering your questions at the end, and so go ahead and you can continue to send those in. I'm not going to stop and address them until the end, and so basically the overview we're going to talk today about the overview of the U.S. Private capital markets, and just to get a broad overview. Again, anybody that's raising capital today needs to be familiar with the securities laws, and so. So this session we're going to do a broad overview. We're going to follow this outline for the most part, and then obviously open it up for questions at the end, and then this will be recorded. So that's kind of what we're going to get into. Also, for any attendees of the forum, we're also going to make introductions to capital raising people that are raising capital for private deals. A lot of times one of the big questions is, how do I find investors? And members of the forum, we're going to be providing a special offer to connect you with some of those capital sources. And so as soon as you get your PPM ready, or maybe you already have one in play and maybe you need to help finding capital, we definitely connect you to those resources. So we're trying to provide a lot of value here at the forum. And so if there's any topics that you guys want to see covered, we have also for the next 12 months, we have an outline of the different topics that we expect to cover. Obviously, that's subject to change based upon what's going on in the news or what's going on in the capital markets. But for the most part, we're going to stay to that schedule once a week. The days may vary a little bit. I do have some travel planned for this summer, but yeah, I mean we'll definitely be doing at least 4 sessions per month, and then just so you get the full value there. So anyway. Just a little background. Again, welcome. Thank you for joining us. I see people continuing to come in. We're excited about this. A lot of you have been following me on YouTube for a long time. I've been doing YouTube for about 10 years now, and just providing kind of general, free information. Usually they're about 5-10 minutes tops on key topics, and as I go back through and look at a lot of those videos, I see, well, there's some that are very, very, the most watched one I think is like, so last I checked, it was like 34,000 views, something like that, on different topics. Obviously, some topics are more relevant than others, but anyway, but the PPM Forum is obviously something we're going to take a deeper dive into each one of these various topics, and that way you can feel like you're not only fully informed in more depth, but also, we're covering a lot of issues that are very, very germane to raising capital, whether you're planning to raise capital or whether you are currently doing so. Again, you could sit down with a securities attorney like myself for, an hour a week and spend a lot of money, but through the forum, the technology is such that we can provide a very very high level of value for very little cost. So thank you for subscribing to the forum. if this is something you find that's valuable, please let us, feel free to refer this link, ppmattorneycapitalforum.com, to your friends or different business associates, and we would love to have them. So let's really brief background on myself. Darren Mangum, securities attorney, been practicing, this is my 24th year, 24th year of securities practice. We have a nationwide, I'm the managing partner of Mangum and Associates. We're one of the premier securities law firms. We're a boutique specialty law firm. We don't do personal injury, don't do litigation, or don't do, we just do securities. And when it comes to raising capital, securities is key, right? So I'll send a link to my LinkedIn bio as well, and love to connect with you. And if we can help you in any way, let me know. But certainly it's important, especially in today's regulatory environment, to be aware of the securities laws. A lot of the bloodbath that's happening right now in the crypto space, and it kind of ebbs and flows of different industries. When oil and gas is hot, the SEC is hot on the trail of oil and gas companies. When it just depends on the flavor of the month or the flavor of the year. Right now, it's a bloodbath in the crypto space because a lot of people just ran out there to raise capital in the crypto and selling a crypto offering, and didn't really consult a securities attorney or do anything about it. So now they're paying the price for that. But it's super important, not only because if you ignore it and hope for the best, there's certainly the possibility of incurring civil liability for like an SEC enforcement action. And at the state level, a lot of people don't realize that the states have, the SEC can bring civil charges of securities fraud, but they can't bring criminal charges. They can make a referral to, say, the Justice Department or the local district attorney, U.S. District Attorney's Office, to say, hey, we think these guys are bad. You can prosecute them criminally, but it's up to the prosecutor, up to the district attorney to whether they take the case or not. Certainly, civilly, the SEC has authority to bring civil charges, civil penalties, things of that nature. But also, when it comes to the states, U.S. states, they also not only do they have civil but also criminal authority, right, to bring a criminal if they feel like the nature of the infraction is serious enough. Sometimes you do look at potential criminal liability, criminal charges, right, which is a serious deal. Anyway, so it's important, right? I think everybody here probably agrees with that. Yep, Bob. Yeah, agrees. Thumbs up. Yeah. So yeah, obviously it's important. Otherwise, you wouldn't be here, right? So I think understanding the key, private capital formation. When you're raising capital for a company or you're raising capital for a particular venture, is certainly. It's certainly important to know the key characteristics of basically you're pooling capital, to do for a certain objective, right? If you're trying to build your company, maybe you're building a product, maybe you're building some technology, maybe you're wanting to acquire some real estate deal, maybe you have this. Maybe you want to be like a private money lender, but you don't have the personal capital to do so. Well, that's when you look at maybe bringing other people in, other investors. Some people say OP, other people's money. If you're pooling other people's money to accomplish your objective, the securities laws apply, regardless of the form of the investment. Whether it's again the form of investment, we can get into that, but yeah, certainly the key players. In private capital are, you're the sponsor typically, the sponsor being who's organizing or orchestrated. Sometimes they're called the promoter, who's going to promote the deal, maybe not necessarily sell it, because that may be done by somebody else, but certainly who's organizing the who's running the company and who's organizing the offering of investment opportunity. That's usually the sponsor. Usually it's a principal of the company, sometimes CEO. Maybe it's if it's a small operation, one-man show, you're the CEO, promoter. You're everything, right? But obviously, in private capital formation, it's different than, say, maybe a public, other investments being like a mutual fund, other investments being like, government bonds. I mean, it's certainly some people call it the alternative investment market, where it's not, I can't call up my Merrill Lynch broker and say, hey, buy me so many shares of, that real estate deal. No, I mean, if it's not available on the public market or the equity exchanges, usually the only time you're gonna find out about it is if you're contacted directly, or if you're maybe a broker is maybe a broker dealer is selling it. You have a relationship, a private investor. So as a private investor, so the key players obviously being the investor, the promoter, and maybe the salesperson that's involved in facilitating the transaction. We can get into details on that. So basically, as far as the a vast majority of capital being raised today, I'd say it's like 90. I saw statistics, billions and billions of dollars is raised every year in the private capital markets. Usually, again, as far as the legal, and there are different types of securities, whether it's a private fund, whether it's a private company that's raising capital. Again, different. It's an LLC. It's a corporation. Maybe you're selling investment contracts. Maybe it's a limited partnership that has a very specific, narrow niche focus. Maybe it's an opportunity fund where, hey, we don't know exactly the thing we're going to invest in particularly, but maybe it's a broader investment fund. There's lots of different types, but certainly the role is when it comes to the legal and regulatory framework. Like we talked about, SEC has jurisdiction, states have jurisdiction as well, and the main thing that they're concerned about is full disclosure to investors, and that's the number one thing that they focus on. If you ever get contacted by the SEC, the first question out of their mouth is, what did you disclose? What is your where's your PPM? Where's your prospectus? We want to see that, because in the private, unlike a public security where they're doing annual filings, they're doing annual reports filed with the SEC. In the private capital markets, there may be limited number of filings, like say under Regulation D, you may be filing a Form D. Like under Regulation crowdfunding, you might file a Form C, right? But those have basically limited information, which is fine. But all that's really doing is saying, hey, how much are we raising? What kind of security are we selling? What exemptions are we claiming? And what's the name and the phone number of the contact people? And that's really the only public information that's out there. When it comes to, but they still require you to, even though it may not be filed publicly and available publicly, the disclosure document is still exchanged between you and the investor, and they're going to want to see that. That's number one. So disclosure. That's the key, the main thing that they're looking for, and obviously that's something that that's something that obviously our law firm, Mangum and Associates, that's what we specialize in providing that, and making sure that that's good, so you don't have to worry about it. But Again, just going down the outline here, investment strategies. Again, depending on where you're fitting in the ecosystem, there's lots of ways, especially if you're wanting to do a private fund. I mean, we talked about if you have a private company and you're doing you're raising capital to test out some pharmaceuticals, or you're doing a real estate deal. There's different ways to do that, but I mean, there's different ways to structure. Based on your investment strategy, you may see opportunities that maybe you don't have personal capital for, but you want to take advantage of, like some of these examples that I listed here on the outline. You want to buy out, maybe you want to buy out a company. I mean, you think about, like, for example, Twitter, right? How did Elon Musk buy this public company for, I forget the number, a couple $1 billion, right? Was it? How did he get this money together, right? He didn't have it in his own pocket. I mean, he used some of his own money, but he just, I mean, even if he sold all of his SpaceX and emptied out his bank accounts, he still wouldn't have enough, right? So what did he do? He pulled a private group together on a large scale, and a lot of different private investors, different family offices, a lot of private venture funds. Really, it's a classic example of how he pulled together a buyout, basically a fund. I mean, he set up another corporation, and everybody came in, and then they did the deal. They closed on the transaction, and Twitter all of a sudden goes private, right? That's certainly a great example of. But obviously he had to do that. In order to do that, he had to, obviously provide those investors with a disclosure, provide them with information about what the game plan was, and what are the terms of the deal. A lot of this was maybe preferred stock. I mean, I've never seen the prospectus or the PPM associated with that, or the term sheet, but it was a very highly structured deal where they had basically their and a combination of debt as well. So it wasn't 100% equity coming in, but they also got some loans from some private loans from some banks, investment banks, and pulling all that together and made the deal happen, right? So that's certainly a high level, certainly one of the biggest transactions of the century, but it certainly is. It's very doable on any level. Even if you're say, oh, I want to buy some. I want to buy this car wash, right? Or I want to buy this franchise. Okay, well, how am I going to do that? Well, maybe I can pool that capital, and maybe it's just depends on the number. I mean, with a lot of this, it doesn't matter how many zeros you want to put on the end of it. It's all the same process, whether it's a handful of investors or several hundred, right? So, yeah, and again, we were talking about how the deal is structured is very important. Setting out the terms and conditions of the investment. What is the investor getting? Is it really going to accomplish your objectives? That kind of thing, right? So I always encourage clients to go through like a hypothetical example of, hey, what if, okay, how much do I think I need to acquire this business, or to pursue this objective? What do I reasonably, what can I reasonably, what's the minimum I need to really pull it off? And what does it cost? What's the cost associated with maybe structuring it, getting good legal expertise involved? What if I, and also, okay, well, I also have to maybe I have to pay a finder, maybe I have to pay a broker to help me find investors. Okay, I got to add all that up. What's the cost of that capital, and what am I offering the investor? So, and making sure that, okay, now that I do have enough capital, does it relate to the deal on the other side? Whether it's like a real estate acquisition, is this going to be enough? And maybe I've got to bring in some debt along with it. Just making sure that that's all. And we obviously help in the law firm, Mangum and Associates. We help people do that. making sure that it's both a fair deal for the promoter and also that it has a reasonable likelihood to provide again, there's no guarantees, even the most well vetted deals, you kind of see it in the banking industry now, right? It's like, well, the most solid, you think these banks are solid, but lo and behold, there's vulnerabilities, and even the best the best structured deal and the most safe, sometimes things happen, like the world, a pandemic happens, or some economic thing, or a war happens, and you may have done everything right, but it just so happens that something happened in the marketplace where things made a turn that nobody really could foresee, and maybe okay, now this, what we thought was a promising investment, now turns into a loser, and that's okay. Well, and that's part of the process. Well, obviously, as a promoter, as a person that's raising capital, that's responsible, what you want to do is protect yourself as much as possible. Get good legal counsel that can draft up good legal documents that could, don't just go off on the internet somewhere. I think I'll pull these documents. I think I'm good. Maybe it's like rolling the dice, with your life. I'm jumping to this airplane, but I just, there's nobody's tested it to see if it's really, good or not. I'm just jumping in and hoping for the best. Or maybe you're jumping out of, you're doing cliff jumping with a parachute, and I never checked it myself. I didn't have a professional check it. I'm just going to take it and jump. Okay, well, if you die or crash and burn, well, that was just maybe not a risk that was a smart one, right? So in anything like in any kind of business, you want to make sure that your bases are covered. You're on a solid foundation, and that way, if you're successful, everything's good. Nobody's coming back and saying, "Hey, I thought this, or I thought that." Or if it's not successful, same thing. I thought this, I thought that. No, it's all fully laid out, fully disclosed, and that way you don't have to worry about it. Just moving on here on as far as. And again, this is a broad overview. We're going to get more in the details as we in the coming sessions. But I'm just giving a broad overview in this session. When it comes to people ask me, well, how do I value my offering, value my securities? Do I need to get a third party appraisal? The answer really is no, because ultimately the market will dictate what an investor is willing to pay for. Again, going back to Twitter, right? Was by the time the deal closed and happened, everybody was saying, well, you kind of locked yourself in there, Elon, the company is not worth. And he's even come out publicly and said that since, and said, hey, I think this is not. This is not, it's worth maybe half of what I thought it was originally. So, but yeah, but again, who knows? In the future, maybe it's worth, hopefully at least what it was paid for it, and then some, right? That's the risk reward, right? So, as far as valuation goes, it's really, you can certainly see, look at the market, see what other comparable companies, other ventures are offering, and use that as a metric, right? It's really the only thing you can do, because even like a third party valuation is that's subject to that may be what it's worth for if you're selling the company, but oftentimes appraisals don't really build in the future economic value, and that's why a lot of investors are investing in the first place, right? They want to get that potential future upside, right? So, as far as when you're looking at everything, doing your as far as investor relations, getting, and maybe that's you, right? Maybe you're very, very if you're the one that's promoting the company and you're promoting the deal and it's your baby, then you're the best person maybe to talk to. with investors about it. But then again, maybe you're like a mad scientist, and maybe you maybe what you have is great, but maybe you're going to put the investor to sleep, or maybe you're going to give them too much information, right? And they get confused, right? Or what I'm saying, it's not always is the CEO or the the person that the promoter. Not always are they the ones that are the best person to get in front of the investor. I've seen that happen where you have clients that have just a great product, great company, great everything, great story, but then they don't play so well when you get them in front of an investor. Either they get cold feet, they don't really talk very much, or maybe they talk way too much. They just like go way into the weeds, and investors investors are just like anybody else. We have a short attention span. We're either going to be interested in this, and if we're interested, okay, well, we're willing to invest more time into it. But again, it's a matter of that. So anyway, putting that strategy together as far as obviously talking to the investors, answering their questions, and then also even after the investment is made, and keeping that line of communication open. Most issues with investors, even if things aren't going so well, they can be solved just through pure communication. Just communicate. Hey, we're going to communicate with you. I mean, you don't want to give all the investors your cell phone, maybe, because they might. You got to run the business. You got to do the deal, and not always are you in a position to answer every question that they have. But certainly you say, hey, well, we're gonna touch base with you once a month at the end of the month, or we're gonna send out a letter, or we're gonna get a quarterly update, something like that. So where they're getting good information, updated information, even if there is no news. It's still, hey, we're contacting you anyway, and just to tell you that there is no news, no updates, but we're just reaching out and touching base, blah blah blah. That's 99% of the problems with investors come from that communication issue. And so thinking ahead, thinking of, okay, well, who's going to be who in our company, and if you're a one person operation, that's going to be you. You're going to be the one doing that investor outreach communication. And if you could manage that through scheduled appointments or scheduled, hey, I'm going to give everybody an update, like, again, on a periodic basis, then that's definitely a great way to go. Future trends and challenges. I mean, certainly, again, we're going to dive into a lot of the details in these upcoming sessions. But certainly, certainly trends when it comes to, what's hot right now? Well, crypto has been hot, and it still seems to be hot, but obviously it's kind of a toxic environment when it comes to, the clients we had, the crypto clients we had that do a full PPM, that do everything right, they don't have to worry about it, right? It's the ones who ignored it, that's the ones that are getting hammered. Obviously, technology is going to be super important. As far as what's going on today now, investors are looking for. At the end of the day, they're looking for safety. They're looking for yield. They're not really getting it in the market like they have been, and so really, it's a great opportunity for you as a what we call alternative capital market investment provider. You're providing an investment opportunity in this alternative space, private capital market space. You're providing them with that, and again, whether it's real estate, whether it's whatever, if you can provide something that is at least a little bit better than what they can find in the market, go buy a mutual fund, or go stick your money in a CD, a bank CD. If you're getting them something that they feel like is tangible, sure, there's going to be risk involved. That's a given, right? And so that has to be factored into it. There is no guarantees, but if you can provide an offering that at least gives them the chance to do better than what they could do elsewhere, then why wouldn't they go with you? especially if you come across as trustworthy and reliable, that you're going to do what you say you're going to do, right? And anyway, so that's obviously people ask me, well, what's the future hold for technology? I mean, I think we're just going to see that's just going to keep getting more and more. We got lots of private investment into AI, artificial intelligence, ChatGPT, and all the rest of it. That's just going to continue, and so a lot of that's just going to continue to drive the economy as we evolve. But anyway, so that's sort of a broad brush overview of the whole of the U.S. Private capital markets. I know that was like a fire hose, but what I did want to do is to kind of jump into some of these questions that are coming through, and one's here. And yeah, if you want to send these questions in, continue to send these questions in, and if we don't have time to get to them all, we'll provide an email address as well. You could always email me directly, Darren@mangumlaw.net. That's my law practice email. Happy to address those questions. Again, at whatever stage you are, if you're just sort of exploring it, hey, maybe we might raise capital. Maybe, this is a place. The forum hopefully is a place where you can not only get educated, but also get the resources you need to make it happen. Whenever you're ready, right? And some people, or maybe you're already maybe you already got a PPM. Maybe you might be already a client of my law firm, Mangum and Associates. If so, well, thank you, welcome. This obviously is a different setting than what we would do one-on-one, but again, we hope this is a resource. And again, everybody that's a member of the forum will not only get the information we provide on a recorded video and also the outline, but also we'll be able to send you contact information for different, depending on what you need, right? Some people are looking for brokers, they're looking for capital sources, different other resources. Maybe they need a CPA, maybe they need whatever. We're certainly glad to help and provide that as another value add for being here. And again, thank you for being here. Just wanted to get into Tamara here says, I've got a corporation. Should I offer common stock or preferred stock? Okay, well, that's a very specific question, and I would say, number one, it depends, right? That's your classic lawyer answers, or depends. I would need to, obviously, just really briefly for Tamara and anybody else, common stock obviously is a very, most fundamental type of stock. Usually, provides, you can do different classes of common stock as well, but usually your plain vanilla common stock is just standard, capital stock of the company, voting rights attached, you have voting rights, and there's just the value of ownership there. Preferred stock, on the other hand, it has a little bit, could be structured as voting. You could have what we call participating preferred stock, where it participates in any dividend that's issued to the common shareholders. It also, maybe it has voting rights, the same as you would, but also it has preferences, what we call preferences, which sometimes take the form of maybe it has a preferred dividend, maybe it has if the company was ever sold, the preferred shareholders get paid first, and then the common, right? So it's a higher level of like the pecking order. They're a little bit higher up. Sometimes when the company is sold, a preferred stock would get other kind of benefits, like we get 2 times our money or 3 times our money back before the common shareholders get paid. Again, but those are lots of different. Preferred stock, but sometimes you can say, hey, this is going to be non-voting preferred stock, or maybe it has a cumulative dividend that may be paid in the future, right? So there's different ways to structure preferred stock. It just depends on what your objectives are. So hopefully, Tamara, that's helpful. Anyway, we could we could certainly talk offline. Shoot us an email, and we could certainly talk more about that. Phil here is asking about crypto. Is today a good time to launch a cryptocurrency? I think from a technology standpoint, I think crypto is the future. We're still very bullish on crypto, Phil. I think that's going to continue to get better and better. And I think this whole spat with the SEC, honestly, is going to work itself out. I think it's going to work itself out. Either these crypto exchanges, because nobody wants to ignore the U.S. capital markets. It's one of the most dynamic capital markets in the world. That's why people come here. And for the most part, it's the most user friendly. When I say user friendly, over the years, the ability to raise capital in the United States or set up a private fund or do a lot of things are very much liberal. I say liberal, I say easy to do from a compliance standpoint than any other country. And a lot of countries have modeled their securities laws after the United States, and so. But as far as the environment goes, it would appear on the outside, just reading the paper, that, oh crap, we're launching a cryptocurrency is a bad idea. I would say no. I think it's a great time to launch a cryptocurrency. And when we say cryptocurrency, I'm including any kind of stable coin, any kind of blockchain token that has some redeeming qualities and features that value that all transacted through the blockchain. Any sort of tokenized offering. I think it's a great time to do that. That's just going to be. I think that is the wave of the future, and we're very bullish on it. But so I just say, yeah, I think cryptocurrency, any kind of tokenized asset, is great to do. You just make sure you comply with the securities laws. That's it. And that's very with a competent securities law firm on retainer or with you, then that's going to be not a problem. The SEC is going to go chase the real bad guys and bad gals, people that are out there doing it wrong. So no, I think it's a great environment, Phil. So, but thanks for the question. Bobby here says, should I do a 506B or 506C? Okay, that's a very specific question for those of you. And I won't spend a whole lot of time on this because we're going to dive into a lot of this in the future forum. But Bobby, for you, I'd say a 506B, Rule 506B is your traditional private placement where it does not allow any public advertising, and you can take up to 35 non-accredited investors. But you can't put it out there on the internet. Hey, I'm raising capital. Come talk to me. 506B is your B, or when I say B, Bravo, B as in boy. Rule 506B is, hey, you need to keep it, just offer it to people that you already have a pre-existing relationship with, and keep it private. Don't go blasting the internet. A lot of people they can't restrain themselves. They're like, oh, I want to talk about it on social media. I want to put it out there on the internet. Hey, we're looking for investors. Well, that's when you really want to look at Rule 506C or Charlie. You do have to restrict it only to accredited investors, and you do have to verify that they are in fact accredited. But you only have to verify them at the time that they invest, and so you can put it out there on the internet. Hey, we're looking for accredited investors, and if you're an accredited investor, contact us. Here's the deal terms. You can definitely do that, but that's 506C versus 506B. It's a no-no. So they're very close in letters and numbers, but very, very different as far as how you market them. So, and Sarah here has a very similar question. How can I advertise a crowdfunding offering? Okay, so yeah, we talk about again, 506B is one exemption, has its set of rules. 506C is another one, has its own set of rules. But then regulation crowdfunding is another, set of rules, and again, future sessions we'll get into that as well. But regulation crowdfunding is a way that you can attract lots and lots of small non-accredited investors. You can have up to 2,000 non-accredited investors come into your company or come into your deal, and you can raise. The only real limitation on regulation crowdfunding is the limitation on the amount, which is you can't raise more than $5 million, which for some people is plenty of money. But the other limitation is that all of your investors have to they have to come in through or an SEC registered crowdfunding portal, which is not complicated, not difficult. There's lots of different crowdfunding portals that you can set up, but as far as advertising, the rules on advertising a crowdfunding offering is very limited in scope. You can basically put out something akin to a tombstone ad or like a Google ad that would just basically say, hey, here's the name of the company, here's the type of security we're offering, here's a little bit about us, and if you want to know more, click this link, and that link needs to take them directly to the crowdfunding portal, which is where they would get all the other disclosure information, the offering statement, and all that. And if you have a PowerPoint, if you have like a video that goes into more detail, that's fine. But as long as it's behind that curtain of the crowdfunding portal, so you can put out there publicly, hey, here's a little ad, but hey, if you want to know more, you got to come behind the curtain and check it out. That's really how regulation crowdfunding is set up. So now we talked about Rule 506C with Bobby about 506C doesn't have those limitations. You can really say just about anything you want, but it has to be you have to make sure it's directed to accredited investors. Anyway, so those are some nuanced details, but yeah, that's certainly doable through a crowdfunding offering. I think the last question, I'll try to wrap this up. I've got Tom here. What does a PPM cost? A PPM is certainly a cost of a PPM. You typically running between. Again, you could spend, depending if you go with a big city, big law firm, you could pay. I've seen people pay $50,000 for a PPM. Mangum and Associates, we've been at it for over 23 years. We've kind of dialed it in, and we're on a very lean operation, and so we've been able to put together some packages of services that really range between $20,000 on the high end to 15 or lower on the low end. So 12 to 15 up to 20,000, depending on the level of services. But yeah, you could probably get it done, a PPM done for around 12,000 all in. What you don't want to do, Tom, is to just go out and get some, like we were talking about earlier, just go out and get some, template and hope that it works. There's a lot of these template shops out there that'll, I'll sell you a PPM, and for it's basically just a template. They're plugging your data in there, and you're really not getting. And they're not law firms. I mean, if the SEC ever came and asked questions, they would they'd run for the hills, And whereas our law firm does SEC defense, and we stand behind our PPMs with an opinion letter and all of that. So it's again, it's like buying anything. You want to buy quality, especially when it comes to something as serious as securities compliance, securities laws. You want to make sure you're not just winging it, right? So anyway, hopefully that's helpful, Tom. But yeah, thanks for the question. I think. Yeah, and we've got other questions coming in. I want to keep these relatively short. Some of these may go longer than others at times, but if there's something we haven't been able to address on the forum today, we certainly are willing to address that in future forums. So please send us those comments and give us the feedback. Hey, if this is helpful for you as well. This is personally, I've never done this before. I mean, I've been on YouTube, like I said, for the past 10 years, but this is a little more interactive as far as, and also hopefully in more detail for our viewers. And so, Anyway, I appreciate you attending, and like I said, we'll be putting out an email announcement on the next forum, like next week, and we'll look forward to seeing you then. Until then, we'll see you. Thank you. Bye.